The promise of AI trading bots is a lie. It's a marketing story designed to separate you from your money, not to grow it. We're told these bots give retail investors the same power as Wall Street quants. The truth is, you're not the customer, you're the product. We'll show you exactly how these platforms really make their money. But the real story isn't the scam. It's the one model that actually works, and it's the one the big banks are terrified of. On a Monday morning, in a glass office in Austin, a startup called Money Simpler hits publish on a press release. They've launched a new AI-powered trading platform. For $99 a month, it promises to do the impossible, beat the market. Their AI scans everything: news headlines, SEC filings, even the sentiment of Reddit posts, to find patterns no human could ever see. It sends you an alert: buy Apple before their earnings report, sell Corning after. It feels like the democratization of finance. The same high-tech tools that made hedge funds like Renaissance Technologies billions are now on your phone. The central question is obvious. If this AI is so good at making money, why are they selling it to you for the price of a Netflix subscription? The answer they give you involves scaling and market access. But that's not the real answer. The performance charts they show you are almost always back-tested. An AI can perfectly predict the past. But the moment it trades in the real world, it runs into a wall. And that's where the real business model begins. If you're already seeing that the product isn't what it seems, subscribe. We decode the real business model behind the marketing every week. So, if the AI's predictions aren't the real product, what is? First, it's your data. When thousands of small investors all get the same buy signal from an AI and act on it, that creates a predictable wave of buying pressure. These platforms aggregate that user activity, your trades, your risk tolerance, your collective fear and greed, and package it. They sell this retail sentiment data to the real customers, hedge funds. Those funds with their billion-dollar infrastructures can then trade against that predictable wave or front-run it. You're not getting a secret signal, you are the signal. One hedge fund manager called it the dumb money indicator. 100,000 users paying $99 a month is a predictable $118 million a year in revenue. But the insight from their collective trading data? That can be worth billions to the right buyer. Then there's the latency game. Even if the AI signal is genuinely good, you're too slow. By the time the notification hits your phone and you log in to your broker, high-frequency trading firms have already seen the same market data, executed millions of micro trades, and captured the profit. The price has already moved. The AI gave you the right idea, but in a world measured in microseconds, a 5-second delay means you're just buying the scraps. But this entire model, selling signals, selling data, is already becoming obsolete. A new type of AI system doesn't try to predict the market, it is the market. This is the truth the mainstream doesn't teach you. The smartest AI in finance isn't being used to pick stocks. It's being used to build entirely new kinds of markets. In the world of crypto and decentralized finance, they're called automated market makers, or AMMs. Here, an AI's job isn't to guess if the price of Bitcoin will go up or down. Its job is to be the house. It acts as a decentralized exchange, holding vast pools of different assets and using algorithms to facilitate trades between users. It makes money not by being right, but from the activity itself, earning a tiny fraction of a percent on every single trade that passes through its system. It profits from volatility. The more people trade, the more it earns, regardless of which direction the market moves. This is a fundamental shift. You're no longer buying a secret from an AI. Instead, you can participate by providing liquidity to the pool, effectively becoming a tiny part of the bank yourself, earning fees from the trading volume. This is the model that legacy financial institutions are quietly trying to replicate. They see a future where the profit isn't in having the best prediction, but in owning the rails on which all predictions are traded. So when you see the next ad for an AI trading bot, don't ask what its win rate is. Ask what its business model is. Are you the client, or are you the data point? Are you buying a signal, or are you just someone else's exit strategy? So, is the future of investing paying a robot to trade for you, or becoming part of the machine yourself? Today, we decode how most consumer AI trading bots aren't selling you an edge. They're selling your trading data to Wall Street or locking you into a simple subscription. The real revolution isn't in AI predicting the market, but in AI becoming the market. To make sure you can always spot the difference between a real tool and a data trap, subscribe so you don't miss our next breakdown. Next week, we're decoding the shadow economy of pre-IPO stocks. We'll show you how Silicon Valley insiders trade shares in companies like SpaceX and Stripe before they ever hit the public market, and how that system is about to change. Now you see how the money really moves. Money Decoded.